there's a wide range where that could fall. So I think we don't know. There are model-based approaches and empirically based approaches that estimate what the neutral rate will be at any given time. But realistically, we know it by its works. So that leaves us in a place where where we expect in the base case to be continuing to remove restriction, and we'll be looking at the way the economy reacts to that, and that'll be guiding us in our thinking about the question that we're asking at every meeting, which is our policy stance the appropriate one? We know, if you go back, we know that the policy stance
So
we
let's go
adopted
see
in
what's
July
going to happen.
of
So
2023 uh, came at a time when unemployment was 3.5%
let's check
and
the
inflation was
prices.
4.2%. Today, unemployment is
So this was already our entry right here. Right here. So what I'm looking for is for the price, even though to hit this spot right here, like this, and then come back down, retest, or retest and get out. So yes, there is a lot of stuff that we're gonna check out today to see what's going to happen, and if it happened, we're gonna see what they are going to do. Yeah, let me check if audio is good. Let me go in.
but there's actually a lot of common ground as well.
Follow up to that. Now that this is in the books, can you give us some guidance as sort of follow up this on the pacing here? Would you expect this to be running every other meeting once we get into next year?
Go ahead, guys.
We're
Like,
gonna-
We're going to
subscribe,
take it meeting by meeting.
hit the like
As I
button,
mentioned,
share it.
there's no sense that the committee feels it's in a rush to do this. We made a good, strong start to this, and that's really,
So this is
frankly,
very important,
a
guys.
sign
I
of
mean,
our
like,
confidence.
this
Confidence
is
in
gonna
inflation
this can
is coming down
skyrocket
toward
crypto
10%
to
on a
another
sustainable
level,
basis. That gives us
and
the ability.
also it can
We
push it
can,
down
make a good, strong
because
start. But
in the years that we have been
I'm
seeing
very
that
pleased that we
interest rate
did. To me,
going
the
up,
logic of this, both
it
from an
didn't
economic
affect much
standpoint and also from
the
a risk management
the price
standpoint,
of
was
Bitcoin.
clear. But I think we're
So
going to go
so
carefully,
yes,
meeting by
we have
meeting,
been seeing since last year,
make our
interest rate
decisions
was
as we
high,
go.
but the price of Bitcoin keep going higher. So there is a reason for that. There is something called the milkshake effect, and you guys can search it on YouTube, or you guys can search it on Ask ChatGPT for it. We'll give you all the informations. So this milkshake effect caused because of we had the COVID, previous COVID in 2020, 19, 20, 21. So there were a lot of money out there waiting for to be absorbed, and after we start seeing this movement coming back
Again, the labor
within
market
these
is
couple of
actually
years, it
solid
didn't
condition.
affect much of the
And
economy.
our intention
But the
with
interest
our
rate
policy move
went
today is to keep it
went
down.
up,
You
but
can
the
say that
price
about
of
the whole
Bitcoin keep
economy.
going
The
up.
U.S.
So we
economy
have
is in
all
good
the
shape.
data, we have it out
Growing
there, so you guys can go
a
research
solid
it, and we
pace.
also are going
Inflation
to
is coming
check
down.
what's
The
going to
labor
happen
market is in a strong
if
pace.
Arkham
We want
Intelligence
to
is
keep
going
it
to
there.
tell us
That's what we're
if the
doing.
money is being transferred or how much money is coming in and getting out of crypto. So we want to see that inflow and outflow of money going in, going out, to see how we are gonna approach this market. Because remember, I told you guys one of the main way you guys can understand and know what's happening in the market is by adapting yourself and seeing have these alerts on, so you guys can know what's happening in the market, so you guys can take advantage of it. Okay,
Okay.
let's go in.
multiple questions there, but so I would say we don't think we're behind. We do not think we think this is timely, but I think you can take this as a sign of our commitment not to get behind. So it's a strong move. So your other question was,
Well, is this about what happened in the employment data between this meeting and the last meeting, or is this about the level of the funds rate, the high nominal level of the funds rate relative
So let's
to
see what can we
might be
expect, right?
expected if you're trying
So
to maintain equilibrium?
if
I
this,
think it's about we come into this
let's
with
listen
a
to it a little
policy
bit. I don't know
position
if
that
the
was put in
audio is
place,
working,
as you
but
know, I mentioned in
U.S. citizen, you can vote from here, here, and even here.
other central banks around the world have cut many of them several times. We've waited, and I think that patience has really paid dividends in the form of our confidence that inflation is moving sustainably under 2%. So I think that is what enables us to take this strong move today. I do not think that anyone should look at this and say, "Oh, this is the new pace." Uh, I, you have to think about it in terms of the base case. Of course, what happens will happen. So in the base case, what you see is look at the SEP. You see cuts moving along. The sense of this is we're recalibrating policy down over time to a more neutral level, and we're moving at the pace that we think is appropriate given developments in the economy in the base case.
so is
The
this
economy can
affecting the
develop in a
crypto
way
market?
that
Let's keep on checking it within 1 hour frame, and we need to break this structure right here. Need to break this section right here.
reserves have really been stable. They haven't come down. So reserves are still abundant and expected to remain so for some time. As you know, the shrinkage in our balance sheet has really come out of the overnight RRP. So I think what that tells you is we're not thinking about stopping runoff because of this at all. We know that these two things can happen side by side. In a sense, they're both a form
So
of
let me go check
so for a time,
what the price,
you
not
can have
even
the
the
balance
price,
sheet
but
shrink, but
if
also
money
cut
arc
dividends.
is coming in and getting out, because I want to see that. So in the after a couple of hours ago, from 8 o'clock until now, we have approximately about $2 billion moving into crypto. 2 billion to be exactly, 2 billion, 2 hours. Bitfavo, this from a Netherlands company. So we see that they are sending Bitcoin from cold wallet to this wallet right here. So yes, this wallet just and send it to Coinbase, and you know what's going to happen after that, right? Okay. What is the outflow? Token balance history, nothing, zero. Outflow, inflow. This is the inflow, and it's still holding right now. Okay. So he's holding these tokens, billion. So what I can do right now is I can just click copy and then save it and then put a trigger. So when he is going to sell or when he sells, I can take a profit. Not even profit. I mean, like I can see that this transaction happen, and then I can maneuver myself to see what can happen within the price market. Okay. So let's see what did I do here. Let's go in. So this is
That should also support the labor market over time. So, but again,
so the labor market looks
very
like it's very
watching,
important, but I know
Just on the point about
there's a lot of
starting
fake
to see
numbers, man.
rising
I mean,
layoffs,
like,
if that were to happen, wouldn't the committee already be too late in terms of avoiding a recession?
so that's our plan of course has been to begin to recalibrate, and as you know, we're not seeing rising claims, we're not seeing rising layoffs, we're not seeing that, and we're not hearing that from companies that that's something that's getting ready to happen. So we're not waiting for that, because there is thinking that the time to support the labor market is when it's strong and not when you begin to see the layoffs. There's some lore on that. So that's the
okay,
situation
so
we're in. We
we
have,
just
in
saw
fact, begun the cutting cycle
um
now.
let me
And
go
we'll be
to
watching, and that'll be one of the factors that we consider. Of course, we're going to look at the totality of the data as we make these decisions.
Ethereum did a
Michael
spike up.
Bloomberg, TV and radio. To follow up on that, what would constitute for you and the committee a deterioration in the labor market? You're pricing in basically by the end of next year 200 basis points of cuts just to maintain a higher.
So they're talking about
unemployment
200
rate.
basis cut for next
Would
year.
you be moving to a more preemptive monetary policy style?
So
rather
things
than
things can
executing
change
inflation
by
and
next
waiting
year
until the
if
data
they keep it
give you a
like this.
signal?
Remember that we
Gonna
talked
be
about this a
watching
couple of
all
weeks
the
ago,
data, right?
that we
as I
could
mentioned in
expect
my
something to
remarks,
go
if the labor
happen.
market were to slow unexpectedly, then we have the ability to react to that by cutting faster. We're also going to be looking at our other mandate, though. We are more great. We have greater.
So
confidence that
let's see
inflation
what
is
can
going
we
down
expect, and
2%,
let's see
but
what can
at the
happen
same time,
within the
our
market.
plan is that we will be
If
at
the
2%.
market react like I'm thinking
over
it's
time
going to
over time.
react,
So, and
so
policy,
it
we think is
means
still
that
restrictive, so that should
something
still
great
be
is
able to
going to
happen.
happen. So can we see that
How sensitive
80,000K?
you'll be to the labor market since you
It's
forecast we are going to see higher unemployment
we
and
can see it.
it's
We
going
can
to
see
take
it.
a
I'm not.
significant amount of
I'm
monetary
I'm
easing
trying to check the
maintain
different
inflation.
side of everything,
So,
but
what
it's
I
not
would
like
say
that
is
I'm
we don't think
like
we need to see
really
further
bullish.
loosening
But
in
can
labor
we see the
market conditions
8K,
to get
80K?
inflation down to
It can
2%.
be possible, right? We have to break above
But
this
we have a dual
trend
mandate,
line right
and
here.
I think you can take this whole action as
So
let's take
yeah.
a step back. What have we been
So let
trying
me
to
go to
achieve? We're
daily.
trying to achieve a situation where we restore price
So
stability
you see,
without
so
the kind
the
of
thing is trying to
meaningful
restore order price
increase
and
in
bring
unemployment
this
that
all
has come
above around here.
sometimes
So
with
we can
disinflation.
see a change if we
That's what we're trying to
break
do.
through this
And I think you
trending
can take
line
today's
right here.
action
So
as a sign of our
if I
strong commitment
mark, like for
to achieve that
example,
goal.
the resistant area, so as you guys can see,
Hi, Chair Powell, Rachel Siegel from the
this
Washington
right
Post.
here,
Thanks for taking our
not even
questions.
resistance, more
You're
like
describing this
confluence
view that you
price.
don't think you're behind when it comes to the job market. Can you walk us
So
through the specific data points that you found to be most helpful
right
in
here.
discussions at this meeting?
And the
You've mentioned a couple
confluential
of them, but
price
if you
is
could
around
walk
here.
us
So
through what that
this
job
is
report looks
is
as far as
where we are
unemployment, that would be
seeing,
great.
like for example,
So let's start with
our
unemployment, which is the
resistance,
single most
and if the
important one.
price already entered that section
4.2%.
right here. So this
That's,
is what
you
I'm
know, I
trying
know
to
that's
check
higher
out. I'm
than
trying to check
we're
out
used to
what can
seeing
happen
numbers
if
in
the
the
price enter
mid
my
even low mid
confluential price
threes
section.
last year. But if
Confluential
you look
price
back
is
over the
between
sweep of the
62K
years, that's a
to
low. That's a very consistent
60K.
unemployment rate.
So this is
And
the
it's in
area
the
we
low
want the price to get
fours
in. If the
is
price
a
get
really
into it,
is
we
good
still
level.
have the
So
support
that's
resistance
one
right
thing.
here, just right here.
Participation is at high
Semi
levels.
resistant right here.
It's,
If I go to
we're
monthly,
right
the monthly would give us
adjusted
a
for
very
demographics for
clear
aging.
what
Well,
is going to happen.
participation
Even
is
though
at
you
pretty
guys
high
are
levels.
seeing
That's
some,
a
you
good
guys
thing.
are seeing something that I'm
Wages
seeing.
are still a bit above
So
what would be
what
wage
am I
increases
seeing?
rather are still just a bit above where they
This
would
right
be
here.
over the very longer term to be
You
consistent
see
with
it?
2%
You guys
inflation.
see
We're
it?
very much coming down to what that sustainable level is, so we feel good about that.
So if I take
Vacancies
this,
over, per unemployed is back to, but it's still a very strong level. It's not as high as it
and
was.
then
That number reached 2 to 1, two vacancies for every unemployed person, as measured. It's now below around. It's around 1, but that's still a
so
very good
yeah.
number, I would say. Quits have come back down to normal levels. I mean, I could go on and on.
But don't
There are
don't
many, many
don't
unemployment
follow me,
indicators.
guys.
What do they
It's
say?
something that
They say this is still a solid labor market. The question isn't the level. The question is that there has been change particularly over the last few months. And so what we say is,
so we are
as
seeing
the
almost the same
as the
pattern
risks, the upside risks
that
to
we are seeing right
inflation
here.
have really come down.
This formation right
The
here.
downside risks to employment have increased.
This one.
And
See it?
and because we have been patient and held our fire on cutting while
Why settle for page 50 instead of on top?
With SEMrush, there's no settling.
risks to both of our goals.
And what do you expect to learn between
So yeah, this is what I'm seeing right now. Same action here, same action here. But yeah, can we see something different? Of course, we can see something different. Waiting for the price. If the price goes lower than this, you can imagine find the price here. But what caught my attention is this cup handle situation right here. It's cup handle, right? But we don't know yet. We don't know what's gonna happen. So everything is possible within this market right now. The movement of a lot of stuff that we have been seeing going around, and we know that the market is reacting to the message that we are seeing right now. So yes, this is what we are expecting now. We're expecting the price to move upwards a little bit and then go down back again. So that means that on Ethereum, the market is green. Market is green on Ethereum, and for example, you guys see here different type of tokens already on top on Ethereum. And if we go further, we guys can see different stuff. So that means that a lot of these product right here are very, yeah. What is this? What is this? Okay, this one look good. Rover. Saved it already. Let's see something else. Okay, we are moving. Okay. What's up, everyone? What's up, everyone? Top 10 top. What's up, 10 top? 50 points. Let's send it 50 points to the moon.
or near zero federal
So
funds rate.
what's going to
Some
happen
people
with the
believe
generation
that
coming
the
after us?
likelihood to keep money
This is going to be crazy. I mean, like,
So this is a question. And you mean
a lot of
after we
us,
get through
a
all
lot of
this?
people don't know what's
It's
going to
just
happen. I mean, like,
great
this is
question that
this
we
is a
just
decision.
we
The
can only
decision that he's
speculate
going to
on.
make today, um,
Intuitively, most
already made
many
it, but
many
it's
people
like
anyway would
it's
say
not
we're
going
probably
to
not
affect the
going back to
market
that
as
era
much
where
that
there
we're
were
expecting,
trillions of
right? So we
dollars
need
of
some money.
sovereign
We
bonds
need
trading at
money
negative
for the
rates,
election.
long-term bonds
So
trading at negative rates.
the only way we
It
are
looked like
going
the
to do
neutral rate
that
might
is
even be negative.
by
So there was people were
doing, for
issuing debt at
example, right
negative rates.
now trying
It seems
to
that's
lower the
so
cut
far
so
away
people can
now.
take some loan so they
My own
can
sense is that we're
invest,
not
or
going back
let's
to
say
that.
support
But
their
honestly, we're going
candidates
to find out.
within
It feels
within 2
it
months.
feels
2 months,
to
September,
me
October,
and
November. Oh,
that
2
the
months.
neutral rate
So
is
that's the
probably
main
sitting
reason
at
why
negative
they're
rates right now.
lowering their interest
How
rate,
high is
right?
it? I
So
just
that's
don't
the
think we
thing,
know.
guys.
We could
That's
sit
the
here. We only know
really,
it by
really the
source.
reason why they are doing it.
How do you
Because
respond to
imagine
increases in
yourself,
what will
this
likely come
this also
at a deeper
this thing
rate
also
cut now
happened
before the
4 years
election has some
ago.
political
The
motivation?
same thing happened 4 years
Yeah.
ago,
So
that they
this is
lowered the
my fourth
interest rate
presidential election
exactly the
at
same reason
at the
for
Fed, and
them to
it's always the
have
same.
money to
We're
support
always
the
going
election.
to this
So they
meeting in
need the money
particular
to
and
support election. So keep that in
asking
your
what's the
mind.
right thing to
So
do
if
for the
I
people we serve, and
raise the
we do
interest
that,
rate, how people are going to
we
take a
make a
loan
decision as a
and,
group,
say, you know what, how I'm
and we
going to
announce it,
invest,
and
or how
it's
I
always
am
what it
going
is.
to
It's never
support,
about anything else.
um,
Nothing else is discussed.
how am I going to
And
support those
I
people,
would also
right? So that's the thing. That's one of the main thing of keeping your eyes on what's happening in the market. So now we have a lot of people that are going to lobby. We have a lot of candidate that's going to run for district and a lot of stuff. So they need money. So the way that we can support, the way that the community, or the way that the Americans can support. And remember, guys, I'm not American, but yeah, what the people can do is, for example, what they are doing is lowering the interest rate. So if they lower the interest rate, people have money to invest, people have money to take a loan, people have money to borrow, people have the opportunity to do a lot of stuff, and also use this as an opportunity to, you know what I mean, by doing this, sending money around. So and what will happen with crypto?
economy
Okay,
is
what
in a
will
good
happen with
place.
crypto
And
if they start doing the same thing? So we need some people need to send money. People need they have their money in crypto so they can use their crypto so to support their candidate. They have money in crypto to send money away and all the kind of stuff. They can take a loan, they can borrow, they can do whatever they want, but it helps the economy to move forward, right? So the only way you can get the inflation under control is by printing less money. And with this Biden administration, I have to be honest, they did not stop printing money from Ukraine until right now. So they did not stop. They did not stop raising, printing money, and that's the main reason why the inflation has been so high. And I have to say, it's not the highest in the history because you know how everything started. But I mean, like, yeah, that's one of the main things people need to see. You know, people need to understand this. So yeah, he's saying he's encouraged by the progress he made for this. So that's good. So that means they are very positive in what they're doing right now. So this is a very good um uh option or very good thing that we are seeing right now at this moment because they're supposedly they are quote unquote positive. But I mean, like, yeah. So you guys listen to that? Want them to do what they wanted it to do. Listen clearly. Listen very clear, very close. Listen, we know that market rents are doing what we wanted to do. Guys, hear that? What we wanted it to do. Keep that there. Oh, he missed it, the portfolio. Oh my God. Wait a second. Let me see why you guys cannot listen to the. Let me see what's happening. People are saying they're not listening to it.
so
So
So I
sorry.
think
Let me
one
go.
of
Let
the
me let me
biggest
let me
concern
let me
that
run it back so you
we
guys
started
can hear what
cut
he
rates
just said.
would
here, and as long as market rents remain, it's been slower than we expected. I think we now understand that it's going to take some time for those lower market rents to get into. It's been slower than we coming down as we know that market rents
Listen,
are doing what we would want them to do, which is to be moving up at relative.
okay? We know that market
Okay.
rents,
Um, we know that market rents
we know that market rents
are doing what we
are doing what we want them to do. Okay? So listen, who control it?
would want them to do, which is to be moving up at relatively low levels. But they're not rolling over.
Listen to the
The
next
leases
step.
that are rolling over are not coming down as much, and OER is coming in high. So, um, it's been slower than we expected. I think we now understand that it's going to take some time for those lower market rents to get into this, but the direction of travel is clear, and as long as market rents remain, you know, relatively low inflation over time, that will show up. Just the time it's taking now, several years rather than just one or two cycles of annual lease renewals. So I think we understand that now, but I don't think the outcome is in doubt. Again, as long as market rents remain under control, the outcome is not in doubt. So I would say it's the rest of the portfolio.
Okay, the rest of the portfolio. He just said it. The rest of the portfolio, and then he changes right away. Listen to it.
The outcome is not in doubt. So I would say it's the rest of the portfolio or of the elements that go into core PCE.
He just said it. The rest of the portfolio, the elements, he changed right away. The elements, right? So yeah, that means he has a portfolio. That means they have a portfolio. They have an agenda. They know what they're working through. They're working to something, to do something.
Because of lock-in with low rates, people don't want to sell their home. So because they have a very low mortgage, it'd be quite expensive to refinance. As rates come down,
Listen,
people will start to move more, and that's probably beginning to happen already. But remember, when that happens, you've got a seller, but you've also got a new buyer in many cases. So it's not, obvious how much
so
additional demand that
so
creates. I
by
mean,
they cutting
the
interest
real
and then
issue
lower
with
it,
housing is
they're
we
just
have
doing
had,
this,
and
giving more money out, printing more money, right? And also what they're doing is they're trying to keep uh interest low because of the effect that we saw with Japan back a couple of months ago. And also um people need money to support the election. So you guys see how all of this goes together.
are on track to continue to have not enough housing. And so it's going to be challenging. It's hard to find, to zone lots that are in places where people want to live. It's all of the aspects of housing are more and more difficult. And, where are we going to get the supply? This is not something that the
It's
Fed
true. The
can,
dude
can
really,
fix.
really,
But I
really,
think as we
really,
normalize rates,
literally
you'll see the
own the
housing market
entire
normalize.
U.S. market
And
portfolio,
I
and he
mean,
said it, the
ultimately, by
portfolio.
getting
So,
inflation
and
broadly
then he
down and
changed
getting
up to something else.
rates normalized and
Well, I
getting
mean, guys,
housing
that's
cycle
why you have to listen closely to
normalized,
what
that's the
people
best
said,
thing we can
because
do for householders. And then the supply question will have to be dealt with by the market and also by government.
Hi, Victoria Guida with Politico.
so let me go
Just
to Arkham
following
and
up
tell
on
you see
some
what's
of the
happening.
labor market talk earlier. Monetary policy operates with long and variable lag.
Let me check if there's. Okay, let me check. One day. Keep this in mind, guys. Keep this right here. So 50 basis point move.
So you're really asking about your second question. You're asking about July, and I guess if you ask, if we'd gotten the July report uh, before the meeting, would we have cut? We might well have. We didn't make that decision, but we might well have. I think
What did
that's
he
not,
just said? We
that doesn't
he just
really
we
answer
didn't
the
make that
question that we
decision. So
asked
this guy
ourselves,
is
which is
just
what's
telling
the
you
word?
who
For
run
this
this
meeting, we're
world.
looking back to the July employment report, the August employment report, the two CPI reports, one of which came, of course, during blackout, and all of the other things that I mentioned. We're looking at all of those things, and we're asking ourselves, what's the policy stance we need to move to? We knew it's clear that we clearly, literally, everyone on the committee agreed that it's time to move. It's just how fast do you go, and what do you think about the path forward? So this decision we made today had broad support on the committee, and I've discussed the path ahead.
Thank you, Chair Powell. Elizabeth Schulze with ABC News. Mortgage rates have already been dropping in anticipation of this announcement. How much more should borrowers expect those rates to drop over the next year?
Very hard for me to say. That's from our standpoint. I can't really speak to mortgage rates. I will say.
So they're making
That'll
a lot
depend
of
on how the
emphasis
economy
in
evolves.
mortgage
Our
rates. But he just
intention,
spoke
though,
about it.
is
So
we think that our policy was appropriately restrictive. We think that it's time to begin the process of recalibrating it to a level that's more neutral rather than restricted. We expect that process to take some time, as you can see in the projections that we released today. And as if things work out according to that forecast, other rates in the economy will come down as well. However, the rate at which those things happen will really depend on how the economy performs. We can't look a year ahead and know what the economy is going to be doing.
What's your message to households who are frustrated that home prices have still stayed so high as rates have been high? What do you say to those households?
Well, what I can say to the public is that we had a burst of inflation. Many other countries around the world had a similar burst of inflation. And when that happens, part of the answer is that we raise interest rates in order to cool the economy off.
Okay, so you guys listen what they have to do. They have to raise the interest rate to cool down the economy.
Experience as pleasant, but at the end, what you get is low inflation restored, price stability restored. And a good definition of price stability is people in their daily decisions not thinking about inflation anymore. That's where everyone wants to be, is back to what's inflation. We just keep it low, keep it stable.
Stop printing. So stop sending money to other countries, so you guys can get your feet and mind into somebody else's business. That's what you guys need to stop doing.
Just by virtue of the fact that they don't have to deal.
That's my opinion, man.
But that's what's been going on, and I think we've made real progress. We don't tell people.
It's true. They never turn off the money print. They keep on printing every day. I mean, like, this is crazy. Oh my God. Listen, I have to say, Ukraine is sitting very well on all that money from FTX, all these things. And then we are talking about 2022 still until now.
I was wondering if you could go through, you said just
will keep on printing. They don't care.
Coming into the blackout, there was like an open thought of 25 or 50. The Fed could move either 25 or 50. I would sort of argue that when we had those two last speeches by Governor Waller and New York Fed President John Williams, that they were sort of saying that maybe a gradual approach was going to win the day.
So let's check the price, because I'm seeing something that's happening right now. Let me go. Let me check the. So yes, so this is dangerous. This is dangerous right here.
Numbers have been a little bit less reliable lately because of the big downward revisions. Does that put your focus overwhelmingly on the unemployment rate? And given the SEP projection of 4.4,
guys, the unemployment rate is not so high, like they are saying it.
Would trigger another 50 basis point cut.
So we will continue to look at that broad array of labor market data, including the payroll numbers. We're not discarding those. I mean, we'll certainly look at those, but we will mentally tend to adjust them based on the QCEW adjustment, which you referred to. There isn't a bright line. It will be, the unemployment rate's very important, of course, but there isn't a single statistic or a single bright line over which that might move that would dictate one thing or another. We'll look at each meeting, we'll look at all the data on inflation, economic activity, and the labor market, and we'll make decisions about, is our policy stance where it needs to be to foster over the medium term our mandate goals. Yeah. So I can't say we have a bright line in mind.
Thanks, Chair Powell. Matt Egan from CNN. I know that you discussed earlier how the Fed does whatever the right thing is and nothing else factors in. But in general, can you talk about whether or not you believe a sitting U.S. president should have a say in Fed decisions on interest rates? Because that's something that former President Trump, who obviously appointed you, has previously suggested. And I know the Fed is designed to be independent, but why? Can you tell the public why you view that so important?
Sure. So countries that are democracies around the world, countries that are sort of like the United States, all have what are called independent central banks. And the reason is that people have found
Okay,
over
listen to
time
this,
that
guys.
insulating the central bank from direct control by political authorities avoids making monetary policy in a way that favors maybe people who are in office as opposed to people who are not in office.
So this is what they are
Yeah,
doing.
that's the idea. Is that, you know, and I think the data are clear that countries that have independent central banks, they get lower inflation, and so we're not. We do our work to serve all Americans. We're not serving any politician, any political figure, any cause.
There you go,
any
there you
issue,
go.
Nothing. It's just maximum employment and price stability on behalf of all Americans, and that's how the other central banks are set up too. It's a good institutional arrangement, which
And
is
that's a
good
lie
for the
right there.
public.
But okay, let's
I
believe
hope
him.
I hope and strongly believe that it will, continue.
Kyle Campbell for American Banker. Thanks for taking the questions, Chair Powell. A couple regulatory developments in the past week that I want to ask you about. First, last week, Vice Chair for Supervision, Michael Barr, outlined his.
Let me check the
views
price
on
because
changes
I'm seeing the dominancy of USDT is going down or is sitting there at that point and it's going down. So you guys remember what I told you? If the dominancy goes down, you know what's going to happen. The price from Bitcoin goes up, dominancy goes down, price goes up, dominancy goes up, price goes down. Okay. So at this moment, we should see the price of Bitcoin going up. Okay. I am at 4 hour. So we are waiting for the price to just reach this line right here. This uptrending line right here. Okay. So let's go to see. You see? Okay, so we need to break through this right now.
Move as a group to put this again out for comment, and then it'll come. The comments will come back 60 days later, and we'll dive into them, and we'll try to bring this to a conclusion sometime in the first half of next year.
So let me know what you guys think about this, guys. So leave a comment below.
Finalizations from the other bank
Only
regulators.
Tank,
What is the
Tin Top,
recommendation
that's
from
here.
Finance
Max Minter,
I would
also here.
Bounce that question to Vice Chair Barr. It's a good question, but I don't have that today. Thanks.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said earlier that the decision today reflects with appropriate recalibration strength in the labor market that can be maintained in the context of moderate growth. Even though the policy statement says you view the risks to inflation and job growth as roughly balanced. Given what you've said, though, today, I'm curious, are you more worried about the job market and growth than inflation? Are they not roughly balanced?
No, I think, and we think they are now roughly balanced. So if you go back for a long time, the risks were on inflation. We had a historically tight labor market, historically tight. There was a severe labor shortage. So very hot labor market, and we had inflation way above target. So, that said to us, concentrate on inflation, and we did for a while, and we kept at that. That the stance that we put in place 14 months ago was a stance that was focused on bringing down inflation. Part of bringing down inflation, though, is cooling off the economy and a little bit cooling off the labor market. You now have a cooler labor market in part because of our activities. So what that tells you is it's time to change our stance. So we did that. The sense of the change in the stance is that we're recalibrating our policy over time to a stance that will be more neutral. And today I think we made a good, strong start on that. I think it was the right decision, and I think it should send a signal that that we're committed to coming up with a good outcome here.
vulnerable to a shock now that could tip it into recession?
I don't think so. I don't, there's, as I look, well, let me look at it this way. I don't see anything in the economy right now that suggests that the likelihood of a recession, sorry, of a downturn is elevated. Okay, I don't see that. You see growth at a solid rate. You see inflation coming down, and you see a labor market that's still at very solid levels. It's so I don't really see that. No, thank you.
I think they're done. Yep, they're done.
Significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state. Inflation has eased substantially from a peak of 7% to an estimated 2.2%.
You and your colleagues.
Maybe
Let's see.
I remain squarely focused on achieving our dual. Our economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a half percentage point. This decision reflects our growing confidence.
Well, half percent. So yeah. Yeah, what I'm gonna things that I'm really, but really something that I'm really thinking about right now is what is going to happen after they they are going to do stuff like calling. I'm trying to discuss what you just say about that they are trying to let people know that the interest rate is going down, but I'm seeing different stuff on chain right now. Okay, let me go to my dashboard because my dashboard is very important right now. My dashboard helps me um helps me let me check El Salvador. Mm, okay, let me show you guys my dashboard, what I'm seeing. Okay, this is very important, guys. 6 minutes ago, we saw a couple of movements within crypto. As you guys can see, this is not so much, but this is really something to check out, right? This is not so much. This is like 6 minutes ago. And if they move from this wallet to this wallet, we already know that this wallet is there is sitting money there, and we are just waiting for it. So at this moment, this wallet is holding to here, holding the token in this wallet. Hopefully, we can see later on some transaction going on. Okay. So yeah, can we expect this wallet to sell? Yes, we can expect him to sell because he just moved it somewhere else, and maybe later on they are going to sell something out there. Okay. So yeah, there's a lot of stuff that can happen, guys. There's a lot of stuff that can happen. That's why I'm very bullish on what's going to happen this couple of months. I'm seeing that a lot of seeing that the interest rate went down. We're gonna see some flow of money. Flow of money. This is very important here, and we have to keep on watching what the market is asking for. So the market is asking for something different. So let's go to token terminal. Token terminal. And let's check what's happening right now on token terminal. Where the money is going to, where is the money moving to? Okay. Let's check bridge deposit B blockchain. So Mint blockchain. What's Mint blockchain? Okay. L2. You guys see, every day we're finding something new. Okay. So this is interesting. Okay. There's a lot of money moving around, guys. Let's check L2s. Base still moving a lot of fees, guys. Base is moving a lot of fees. So let's check some bridge. Who's bridging? D bridge. DL. Yeah, DLD bridge. Very important one. Yeah. I see 7 days. Yes, true. So that's it for today, guys. Let me check. I'm just checking. I'm gonna do some stuff now. Finish up a project that I'm working on, and I will be back with some more stuff for you guys. Oh, sorry. I thought you guys were watching that's side of sorry. So money is moving. Money is moving through different bridges. So that's something good right now. If the money is moving through different bridges and they're going up and down, that means there is money in business. See you guys next time. Bye bye. Cheers.